hope everyone's having a great week so far. Excited to be going over cash versus accrual reporting and hope that I can help you understand it better for those that have questions. So my name is Lori Walsh. I am a partner here at Fourlane. And again, as I see the numbers going up, so we will be going over the cash versus accrual reporting today. There will be an option for questions, so go ahead and put them in there even if we don't have time to get through the questions on the webinar. We'll make sure that some answers get out to you after. So again, feel free to use that question box if you have some. All right. Yeah, they're still coming in. Let's go ahead and get started. Again, I'm Lori Walsh. I am a partner here at Fourlane, and today we are going to be going over the cash versus accrual reporting. But before I do get started on today's topic, I do want to remind everyone that we do have a YouTube channel. So if you have missed any of our webinars or there's other recordings out there as well, you can always find them on our channel at youtube.com/Fourlane, and that's Fourlane. Please subscribe to our channel. That way you'll get notifications when any new videos are uploaded. You can also connect with us on our Facebook page. That group name is Fourlane QuickBooks Enterprise. There's a bunch of great information out there as well. You can also ask questions and have peer communication, right? So you can get some help with some of those questions that you may have. I also want to let everyone know about our on-demand support that we do offer. It is $25 per QuickBooks user per month for up to 5 users. That price does drop to $20 per user per month for 6 users or more. The way it works, once you get signed up, whenever you need help with some of the issues listed on this slide, such as product registration, QuickBooks error codes, maybe a rebuild fail, all it takes is a simple email to our help desk about what is going on, and we'll get back to you within an hour to go over what the issue is and find a solution. So please reach out if you would like more information on this support plan and on how it works. All right, so now let's get started. So why is it important to know the difference between cash versus accrual reporting? Well, being able to understand our financial statements is very important in determining how our business is doing, along with what decisions we need to make. So one of our main focuses here at Fourlane is to help clients to focus on using their data to make better business decisions. And one way to do that is tied to understanding how we report revenue and expenses. All right, so what is cash basis versus accrual basis? Well, the base difference there is when revenue and expenses are actually recognized on our financial reports. And I've given you 2 examples here, one showing cash basis for the time frame of December 1, 2026, because I am using a sample file, through December 15th. And I also have the other one in the accrual basis. So when we use the cash basis, the income will show up on the P&L at the time that that invoice is paid. Okay, so if we did the work in January, for example, but the customer doesn't pay us until July, we won't actually see that on our reports until July. Okay, so that does kind of give us a different view of our income line, right, than it would if we were on the accrual. If the same thing is going to happen on the expense side, if the expense occurred in February, but we don't pay it until May, we won't recognize that expense until May when that bill is paid. So this means that if I'm running my aging reports for my accounts receivable, and we'll be able to see more of this when I get into the sample file, but if I'm looking at my accounts receivable or accounts payable and I am reporting in cash basis, those are not going to match what's on my balance sheet, right? Because technically, since it's when it gets paid, we don't have accounts payable and accounts receivable, or we don't look at it the same way. Okay, so since we're looking at when that money's received, our income lines will show differently, as you can see here. So on the cash basis, for instance, our total income for that month is $390,472.06. But if you look at accrual, we actually invoice for $504,779. Big difference. You look at our COGS, it's going to be the same, right? Because that the expenses for that, meaning whatever inventory we sold in this case, right, that won't hit until the payment. So it does reflect in a completely different way. Now, if we're looking at on the other side, looking at the accrual side, this recognizes our revenue and expenses on the date of the invoice or the bill. So taking those same examples that we had just a second ago, if we do the work in January, it'll show up on our income line in January. Same thing for the COGS, it'll show up when that invoice hits. So even if that customer doesn't pay, right, until July, it doesn't matter, it's going to show on our income line. This helps us kind of make decisions because we know what our trends are and that sort of thing. So if you look at these two examples again, when you compare the two, right, it's kind of easy to see why we would want to do one versus the other, but we will go into much more detail on that in a second. All right, so now let's go ahead and jump into that sample file so we can just kind of get a little more hands-on. Let me close out this one. Now, I do have my profit and loss. I went ahead and set these up so that you could see them side by side in more real time so we can actually look at more of the transactions, okay? So how do I know, though, if I have my file set up for cash or accrual? Well, there's a couple of ways to find out. The way we actually set it up, right, if I go to my preferences page under edit and preferences, and I look at my reports and graphs, if I go over here to company preferences, this is where I would set it up. Now, in my file, right, I have it set up for accrual, but I can always change it, right, even at the report level, which I'll show you in a second. But I do have mine set up for accrual basis. But if you do set it up for cash, know that you can always switch it back, okay? So what I have here is my accrual report. And again, I just did this for where it defaulted. But I did the exact same report and I changed it to cash, okay? So if you look here, my income total is $75,930 for this time frame. But over here, it's $24,525. Another big difference, right? So if I drill into this amount, the $22,475, right? I see it's made up of these 4 invoices and a credit memo. So if I drill into this first invoice, for example, it shows here that this was paid in December, but my date here is November, okay? So it didn't reflect it. And even if I look at my history, my invoice was created here, the client received it here, and they went ahead and made that payment here, right? But it's only reflected because of this date for that December timeframe. Okay, that means on any inventory items, for example, the COGS is going to be reflected at that pay date too. Okay. If I look down here, oops, let me get out of that one. If I look down here, another example. So I have general liability insurance on this profit and loss report at $230, but here I have $2,230. So why is that? So if we go in and drill in, I have a check here for the $230 that matches over here because that's when that payment was made, right? But looking at my bill here, that was dated on 12/15. So that's why it's reflected on the accrual side. Now, that makes a big difference, right? If we're trying to keep up with what expenses and what sales we have per month so that we can kind of make better decisions, helps us too. If we're looking, if I were to change this to 26, for instance, and I look at this, whoops, on a month-over-month basis, I can actually see my trends, right? Whereas if I'm doing cash, the trends I'm going to see there is when I get my payments. So they're a little bit different. And understanding those differences, like I mentioned before, is key on making sure that we can reflect and see which may be our busiest time frame, right? When we do more business, that can be like residential builders versus commercial builders, well, actually builders in general, right? Maybe landscaping. their busy times may be in the spring, summer, and early fall. And for some areas of the United States, it may be snowing, so they may not be able to do as much, right? So then knowing when our trends are, we can make those decisions because we know, okay, now we need to find another avenue to go to maybe bring in more income during those slower periods, right? Where retail, their busy time is usually during the holidays, right? So knowing when those busy times, our accrual will help us with that, okay? Some other areas to kind of look at whenever we are trying to figure out which way. So the cash basis, it's a little more simplistic, right? It allows us to, we don't have to worry about our AR, we don't have to worry about our AP as far as for month over month closing, right? Because if I look at my balance sheet, and this one is in accrual, right? So I have an AP total over here, and if I run my AP aging, right? Whoops, let me move that over, make it a little bit easier. I have 145, 604, that matches over here. Now, if I were to change it to cash basis, right? Technically, on a cash basis balance sheet, I really don't have AP or AR because I won't know what that is until it's paid, and that's when it's going to hit my profit and loss report. Okay, so it's a little bit different. Now, one of the drawbacks to this can be our cash can reflect a higher amount, right? So if we have some old invoices that were paid this month and I have current invoices paid this month, my income line may be really high when I might have only invoiced 2 customers, right? But if 5 of them paid, then it's going to be overstated. It can also go the other way, right? It can be understated if no one's paying, right? Because maybe we've hit a rough patch and it's their slow season too. We may not have that. Where on the accrual side, because I can see month over month, I'm going to know, again, what my actual income was based on when I invoice them, not when I get my money. Okay. The advantages or some things to look at on the accrual side, right? So kind of determining which one do I need to use. So if we need to see, like we talked about, our busy time versus non-busy time, so we can maybe possibly make some decisions on, do I need to add another revenue stream for those slow times? The accrual is going to help us with that. Now, the accrual method is also used more for larger businesses, right? Especially if they're making a lot of prepayments, like maybe insurance, or if they have things that they pay once a year, but they want to expense it over a course of month over month, right? That allows us to see all of our business activity in the month that it occurred, not when the customer can pay us. It's also if they need to have audited financial statements, right? Or if they are a publicly traded company, they will report in accrual basis. Again, it gives them that month over month trend analysis that they can go in and look for or look at. It also goes along with the generally accepted accounting principles, or GAAP, as it's known. It can also seem a little more complicated just because we will have to reflect the unearned revenue, right? Some will reflect it on a monthly basis. Some will do it at the end of the year whenever they're actually getting ready to file their taxes. Just depends on setup. And so that one, for some people, it's just a little intimidating. So they don't necessarily want to have to deal with that. A lot of times we see it with smaller businesses that they're more not necessarily mom and pop, but they have stuff that they need to do and they don't have a big accounting crew that can help take care of some of that. So they will go with the cash basis there too. So let's just kind of take a look at some of the other differences that we can see. So if I have let me see if I still have it open. I do not. So let's go ahead and look at our accounts receivable and kind of compare between the two. So here's everything that we have, right, that we've actually invoiced, because this is going to be reflected in accrual because it cannot be reflected in cash basis, right? So we make the assumption that this should match our accrual balance sheet, just like the AP should match the other side. If I go in here and drill into that invoice, right, again, it's going to be reflected on the date it was created and not the date it was paid. But if I go ahead and I show, let me just change this to cash so you can see. So there's still some things showing on AP, right? There's still some things showing up here on the accounts receivable, but they don't tie. Let me get out of that report there. They're not the same. So one of our month-end checkpoints, right, if we're wanting to make sure, because on our balance sheet, right, it should tie to our aging summaries and our AP summary and our inventory valuation report. And if we do charge sales tax, right, that liability also needs to tie back. But again, that would be on the accrual side. If we're using cash basis, if we just change this back, then we can actually see them. So if we're doing our month-end closing, right, this may be something we're going to need to add, is to just double check. And I actually have a client that they do report for taxes. They do report on cash basis, but he doesn't like looking at the cash basis financials because he can't see a lot of things, because his main focus is, I need to know what I invoiced out this month versus what I owe this month, right? Because it's the same thing on the AP side, right? What do I actually owe my vendors so that I can kind of look at things on when I need to pay them. Now, on the cash basis side, right, if I have money coming in, right, I know how much cash I have. Obviously, cash is on the balance sheet on what's in the bank, but if I know I have these invoices that have been paid, right, I may be able to use this a little easier on how do I go ahead and time when I'm going to pay my bills, right? Because that's definitely something too, right? We want to be able to judge our cash flow. So the cash basis for some makes that a little bit easier without having to actually create a cash flow report, whereas balance sheet on the accrual side, we can't really see. We see what we have in the bank based upon what what the cash is, right? But you can't necessarily see like what the timing is on these. So it's just a little bit different. On the sales tax, right? The liability, if we're using cash basis, that liability is going to be just like when our income. So as soon as we get paid, we owe that sales tax. On accrual, right, we owe that liability whenever. So if we have to pay our sales tax on a monthly basis, then we would pay it based on when we invoice the customer, not when we actually get the money back or from the customer. Again, all of these are tied and all of them are crucial to make sure that we know how to read our financial reports. So on any of you that are listening, it'd be interesting to see if you like how you're doing your reporting, or if you know how we're doing our reporting, right? Because that's a scenario too. Because we get a lot of clients in that they have no idea what the difference between the two are. And then they also don't know how to read the financial statement. So I would be interested to see how many of you that are here have some of those questions, right? On how we can manage that, right? Or what do we need to be looking for? Accrual, right? It's kind of easy. We want to make sure that our inventory matches our inventory valuation summary report, right? Which is here. We want to make sure on our AP side that our AP aging, this total, matches what we have on our AP side. Okay, if we have sales tax, right, we want to make sure that that is reflected here because that liability report should match. Where, as you can see, if I change this to cash, my AP does not tie. Okay, Now, what does this kind of help us with? Again, on the AP side, it tells us what we owe our vendors so we can make those decisions, right? Our aging report helps us there too, if it's in the accrual, right? Because it shows what's current, what's older, so then we can make those cash decisions there. Whereas on the, let me change this back again, on the cash, we don't know what this is, right? I can drill into that and I can see, but it's going to be based on different things than what we're looking at on the accrual. Because again, it's reflected when we pay it on the AP side as opposed to when we get the money in on the AR side. And the AR and the sales tax are tied, right? Because of when we get paid. If we have to accrue sales tax on the AP side, right, that's going to be the same. It's going to be reflected when we pay that bill. Okay. So again, it's just the recognizing when and how they tie together. Now on that one, oops, let me change this back to our date of 12/1. All right, let me refresh that. Okay, so looking here on our income side, right, we can see what we actually invoiced out. And if we look at, now that's a zero amount, so that won't help. Looking at the history, if there's some questions too that you have on whether, because we have some clients, right, that come to us and they're like, well, the tax team is saying we're gonna file in a cash basis, but I don't understand what that is, right? What does that mean for me? Well, now we know, right? It means that we have to report things differently or recognize when they're going to hit our reports, right? Because it's just like with a transaction in QuickBooks, right? The minute we hit save on an invoice, that impacts our reports. But which reports does it impact, right? Because it does depend on our basis. If I create a new invoice and hit save, but I'm reporting in cash basis, this will show up on my AR aging report, but it's not going to show up on my P&L report. And now, if I'm in accrual basis, right, it's going to hit all of those reports. So understanding how that impacts and what that does for us is important. Now, as far as making business decisions, right, which is one of those key factors, we want to be able to know what's on the report and how it's going to impact us as a business owner. If we have customers that are slow in paying, then we have to make decisions on how do we either get them to pay faster or how do we make sure that we're not giving them, because if it takes them 6 months to pay us, I mean, we've already provided them the goods, we've already provided them the service, whatever it happens to be, right? And yet they're kind of maybe not taking advantage, but in my scenario, they're going to take advantage, right? So they're taking advantage of the fact that I've already provided them the service or the material, right? And they're taking their time because, again, it may be slow for them. The cash flow may be hard for them at that period of time. But we need to be able, right, to recognize what that is and say, okay, maybe we're not going to sell to them except this much, right, where we can use our collection center to help. They're on the accrual side, right? We can actually see that a little bit easier in the fact that we have, let me get out of this. And because we have our summary here showing what bucket as far as timing, right? So we know that if we're looking at let me get back to my balance sheet. It looks like I closed that right on out. Let's go here to our balance sheet. Okay, but if I'm looking at this number, right, on my balance sheet, I know exactly what makes up that number over here. So in that aspect, it's more clearly identified, right? So then we can make those decisions. Also recognizing that you can change it between the two so that you can actually look at it in both, right? I have another client that they actually keep their QuickBooks file in accrual basis, but they just run their reports for the tax team in cash. And then that way, when they fill out their tax return, or when the tax team fills out their tax return, they have the right reports. All right, let me see if we have any questions out here. That looks like, oh, I'll have to check on that for the forecast creation and see, because it looks like there may be a question on that. Okay, so it doesn't look like we have any new questions out there, so I'll just keep kind of going through some other scenarios. So let's look at, let me close out our aging report here. And let's look at our, let me go ahead and run a balance sheet and see if I can do this one side by side. All right, so let's do this. Yep, and let's move that over here. All right, and let's just look at some of the other areas where we have some differences here. All right, so our company, our checking, right, those match because that's cash. So those would be the same for both. Okay, so you'd be able to do your reconciliations and not have an issue because it's still going to be for those cash accounts, right? That's when the money's coming in. Those are going to be impacted by that in real time. So you won't have to do anything different there or look at anything. Your accounts receivable, we've already talked about. So we're not going to have to worry about that either. But another area that's really good to know, our inventory, right? Because we did invoice, so it did relieve the inventory. So as you can see, our numbers are reflected accurately. So we can still maintain inventory on cash or accrual the same way. It's just when the money's reflected, right, as far as our income or our expenses too, right, which is pretty much our base on why we're doing this, right? Looking at prepaid insurance. Okay, now in this particular scenario, they match, but most of the time, if we are doing, and it may be just timing in this sample file, but if I were using the prepaid insurance, so I pay for the year for our building insurance, for example, well, I need to expense that out on the accrual side. I'll expense it out monthly. So I take whatever my amount is. So if it's $12,000, I'm going to expense $1,000 a month, or maybe that last month, if we are, renegotiating our insurance, it may change a little bit depending on what they do. But still, we're keeping up with our prepaid on the balance sheet because we've already paid it. But on the balance sheet for the cash side, right, it's going to be reflected when we pay. Okay. Looking at our fixed assets, those are going to be the same. Let me get this up here a little bit farther. And then just looking at our AP, we've already talked about, so we know our insurance. Credit cards will be the same because that's at the time that we actually paid it, or because since we pay our credit cards, or it's reflected right as an actual charge against it, it'll show there the same. And it looks like the rest of it down. So our net income will not be the same because again, just how it hits the P&L. Okay. Looks like we're almost done with time. So I didn't recognize how quickly that has gone. I didn't see any more questions coming in, but please feel free to email us any questions. Again, you can catch us on our Facebook page if you have questions that you want addressed on the Facebook page, so that we not only have the Fourlane team, but you have fellow peers, right? That we can learn from each other. You can see some of our stuff out on our YouTube channel too, and you feel free to email, right? My email is lwalsh@fourlane.com, and that is Fourlane, one word. And I really would love to hear from you, especially on some scenarios that if you have questions on how you're supposed to do the cash or accrual, right? Or if there's some scenarios that you have that are kind of unique in utilizing those two areas. I'd really love to hear from you about that too. Anyway, I hope everyone has a great rest of your week. I appreciate you joining us today. I hope everyone has a good day.